S&P daily chart. This is a chart posted on Twitter on Friday, and this is a chart just for us to observe how market is moving, these narrow channels, and either a parabolic move higher from them and then lower correction sideways again, grinding in the narrow channel, moving down, grinding in the narrow channel down, or grinding in a narrow channel, parabolic move higher, then down, moving sideways, up, and again in a channel. Now we are again in this channel, and let us zoom on the current chart starting from the corona low March 2020, and to observe what could happen if we don't get a parabolic move above the all-time high, because that is certainly one of the scenarios that market could find here a support and to move higher. Blue moving average is daily 50, red one is daily 200, so traditional moving averages, and 50 was already support here. Market already bounced once from it, and now for the second time in a very short period. So this is the situation from which we could get a pullback and a move lower. These here are the major support zones. Now observe these prior moves like this here. So this was a bounce, then grinding, then parabolic move higher. Resistance was formed in the June 2020. Pullback, two pullbacks, market finds support at the daily 200, moving higher, grinding through the resistance, push higher, another parabolic move, test of a breakout. Now this was grind and test as it goes. This is the real test, and test of a former resistance now acting as support was 2 times. And then again push higher, grind through resistance. So exactly the same thing happened like here, but we didn't get a back test of a breakout. Market here made a breakout above the September 2020 highs. Now let's observe other things as well. This pullback was a pullback for around 10%, a bit more. Similar pullback would be this one. So market already made a pullback like this just a few months ago, and for this kind of pullback around 10% or up to 10%, you can get only a technical correction for 3 to 5%. 5 to 10 it would be a larger correction, and only technicals are enough for that, not to mention the rising yields on bonds, which could also play a part in this. For getting this, a bigger pullback, and literally a bear market below 3,200, market needs a fundamental catalyst. Now let's observe other things as well. If you make a fib from here, why from here? Because this directional move started from a bounce from daily 200, and you could see that here market got the confluence of the 61.8 and former resistance acting as support. Similar fib you could make from here, and then you would get a confluence between halfback and the support around 3,600. When market lose daily 50, it could go down toward the daily 200. Daily 200 now is here, but as time goes by, it would likely go higher, and then there could be a confluence between 61.8 and daily 200. So in any case, I would pay attention to the 3,600, because that is possible for market to make that kind of pullback. It was already here done that in September. Then that would be a possible thing. 3,500 could be also a slightly bigger pullback. In that case, there we would get a confluence with 61.8, and breaking this support area and going all the way down to the lower support would be a lower odd case. So that would be my opinion about the S&P and the possible correction in case we don't get a parabolic move higher above the all-time high.